Morning team, Michael Malcolm here with Malcolm Investing. It is a goal of mine on this channel to guide you in the right direction towards financial literacy, making the appropriate investments, and building wealth. Today what we'll be discussing is 7 tips I have for you on investing in a down market. Tip number 1, recognizing you're in a down market and it can last for a period of several years. This is important because rather than fixating on your losses, constantly checking on your portfolio, you have to be able to shift focus and understand that this is a golden opportunity to buy quality names you love at a cheaper price and add to the assets you already have. Number 2, have as much cash as possible. And by this, I don't mean panic selling all your assets for losses. No, I mean you want to work as hard as possible and save as much as possible, understanding that everything you purchase now in this down market will look wonderful when everything recovers. Step 3, have as much cash as you can spare prepared in your brokerage account. Brokerage accounts sometimes take 3 to 5 days to process incoming deposits. This could be 3 to 5 days of missed opportunities. Sometimes a flash crash or sale could last only 2 days. By the time you're ready to make this purchase, it has already started to recover. Step 4, you want to buy quality names you have the utmost confidence in and that are staples in our economy. The principles and disciplines of investing only apply when you have high quality names.
People are concerned they haven't really introduced any new products.
Well, if you have to closely follow a company, you shouldn't own it.
Really?
No, if you buy a business, if you buy a farm, you go up and look, every couple of weeks to see how far the corn is up, and you worry too much about whether somebody says this is going to be a year of low prices because exports are being affected or anything like that. You buy a farm and you hold it for. I've got one farm that I bought in the 1980s, and my son runs it, but I've been there once.
Now, if you have highly speculative stocks and assets, it's much harder for you to be advised or for you to convince yourself not to sell for a loss. Things will recover when you're holding these speculative names versus when you're holding large companies that are very important to our everyday life. You're much more confident that these names will recover and even encouraged to buy more. Step 5, you want to avoid paying attention to any commentators, social media advice. No one knows what's going to happen in the market. People say it's going to be terrible and then it's a good year. Or people say it's going to be a great year and then things are disastrous in the market. Focus on your goals, your core disciplines with investing. Add when it's low, hold tight when it's high. Step 6, focus on earnings and trend changes. Rather than listening to spectators, pay attention to the earnings and news that could possibly impact the headwinds for a company. I'll give you an example. Netflix, everyone's favorite pandemic stock. People were claiming it would go to $1,000 a share. It would take over many different regions, and suddenly competition arose. Subscriber growth went negative. Completely different sentiment on Netflix. This is the kind of news you want to pay attention to. You want to be aware of when trends change and adjust accordingly. Step 7, and most importantly, you want to average down in your quality names. You don't panic and sell your quality names. You have to know when the market recovers, it will recover as well. This is a golden opportunity to bring your average down in these quality names. Market goes down 10% in your quality names. You haven't lost anything yet because you haven't sold any of these positions, but here's an opportunity to buy more of this name at a 10% discount. It's important to stay in these quality names. Historically, these quality names always recover, always go higher. The more you add to these quality names during the down market, the more money you'll make, 1, in recovering your losses, and 2, increase in the new positions as the market recovers bearing there isn't a trend change, as I've mentioned before. Again, my name is Michael Malcolm here with Malcolm Investing. The goal on this channel is to guide you in the right direction towards financial literacy, help you make the appropriate investing decisions, guide you on a path of building wealth. Thank you for your time, and you guys have a great day.